For more than a year, one bot quietly taxed almost every trade on Ethereum, and today someone finally turned the tables on it. Jared from Subway.eth, the most notorious sandwich attack bot in crypto, was itself exploited and drained of $7.5 million. A sandwich attack works by spotting a pending trade, jumping in front of it to push the price up, then selling right after, pocketing the difference and leaving the original trader a slightly worse deal. Between November 2024 and October 2025, this single bot was behind roughly 70% of all sandwich attacks on Ethereum, skimming small amounts from thousands of ordinary swaps. Researchers say the attacker found a flaw in the bot's own code and used it to siphon out the $7.5 million it had been sitting on. There is no customer money at stake here, since the funds belong to the bot's operator, but the episode is being read across crypto as a rare case of a predator becoming the prey. The biggest wave of money to ever leave Bitcoin's exchange-traded funds just washed out in a single month, and it set a record. US-listed spot Bitcoin ETFs shed about $6.4 billion over the past 30 days, their largest net outflow since the funds first launched in early 2024. These funds were meant to be the steady, long-term buyers that anchored Bitcoin's last big run, so watching them sell on this scale marks a notable shift in tone for the market. Over the same month, Bitcoin itself fell roughly 17%, slipping to around $64,000 as the steady selling pressure built day after day. Market sentiment has now sunk into what analysts call extreme fear, the lowest reading in months, with traders pointing to higher interest rates and a cooler macro backdrop. Outflows like these don't push Bitcoin lower on their own, but they show that the institutional demand which powered last year's rally has, at least for now, gone firmly into reverse. While record amounts of money pour out of Bitcoin this month, one of the most cautious kinds of investor there has just decided to step in. A Japanese corporate pension fund is planning to put about 1% of its assets into crypto, according to a report from the business daily Nikkei. The fund isn't a single company. It pools the retirement savings of roughly 1,200 small and medium-sized businesses across Japan. Pension funds are usually among the slowest and most conservative players in any market, bound by strict rules about protecting workers' money, which makes any crypto allocation a meaningful signal. 1% may sound tiny, but for a fund of this size, it represents a deliberate long-term bet rather than a quick trade, and it would sit alongside traditional stocks and bonds. Japan has been steadily warming to digital assets, and a pension fund crossing this line could give other institutional holdouts cover to follow, even with the market deep in fear. Subscribe now.